right, so welcome back to QuickBooks after your first exam. And we're going to be continuing on with Chapter 5, Bank Reconciliation and Bank Transfers, okay? So again, in this book, it tells you that you need to be opening your portable file, Bank Rec 21, okay? Passwords there, all right? So when we're talking about bank transfers or just things that you could do with banking itself, right? And the most important thing about what we have here is going to be transferring between bank accounts. Now, of course, it's just like when you do some online banking, or if you physically go to your actual bank account itself and you transfer money from one account to another. Same ordeal here. Same thing with an electronic funds transfer, right? If you need to move from one account to another account, then this is what you have to do. Now, this isn't just moving from account like a regular like an asset account to an expense account, right? No, this is for strictly your bank account, because again, this is a common transaction that you can do in QuickBooks, and this is how you do it. So, for any reason you need to transfer money from your checking account to your savings, or vice versa, if you don't have enough money in your checking account, maybe you need to transfer money from your savings to your checking account. Or for a lot of corporations, they do have what's called a restricted or reserved savings or money, okay, where that lump sum money is restricted for expenses that arise that you have to pay for. So in this case, there is only one way to be able to do this. Only one way. And that is going to be through your banking menu. Okay. And it says right here, transfer funds. Okay. Only one. You don't have it on the homepage. Okay. We don't have a banking center. Okay. We'll talk about bank feeds in a second. But in this case right here, you got it on your banking menu, transfer funds. Okay. And it's straightforward from here, right? You just simply fill out your transfers and go ahead and press save and close, and it's done. So in this case, right, we want to transfer money from our checking account into savings. So in this case, checking, okay, to savings. We're doing this on January 28th of last year, of course. Okay. Is there a class that you put in here? In this case, this doesn't affect any of the stores, San Jose um or the Walnut Creek. So what we have here is overhead, where it affects both companies. Okay. So in this case, I want to transfer money from my checking account, and I want to transfer it to my savings account. So again, you're only strictly able to do this through your bank accounts, okay, and other accounts here. So again, you wouldn't necessarily do a bank transfer to any other than just your bank accounts here. But in this case, if it's necessary, then you can go ahead and put it into liabilities and whatnot. Now, again, you wouldn't necessarily move any money from your checking account to this unless you made a mistake. But you wouldn't use a funds transfer to fix that mistake. And we'll talk about that in chapter 14, okay? When we take a look at general journals, that's what you're mainly going to be using that for. But in this case, you should be strictly only transferring between bank accounts and so on and so forth, okay? So in this case, I want to transfer money into my savings. Now, how much money do I want to transfer to my savings? It's going to be, again, subjective on how much money you want to put in there. But in this case, I want to go ahead and transfer $100 into my savings. All right. Do you need to put a memo In this case, you could put your memo on whatever it is, but it is a funds transfer for any reason that you want to do this, all right? Whether it's if you want to, because you need to make a payment or something, then put that in the memo. But in this case, it's a bank transfer, and I can go ahead and click Save and Close. Now again, you need to do this first on your bank account first, and then you record it, the bank transfer right here in QuickBooks, okay? Because in this case, money does not magically work, you know, on from QuickBooks into your bank account unless you do link your bank account. Then, even so, you wouldn't necessarily do the bank transfers using, you know, banking, right? You would use the bank feeds, which we'll talk about in a few minutes here. But in this case, you physically need to make the transfer first, and then that's how you record that you have the transfer. So again, you need to go on your banking app or online, whatever it is, successfully complete that transaction and then record it later. So then in this case, right, you're going to see that for my checking account for the 28th. Okay, let's see, 28. I see 28, 2021. Here you go. I did a transfer, okay, into my savings account, $100. Okay. So again, pretty straightforward, and that's what shows up on your checking account. Okay. So checking register, check register, whatever you want to call it. This gives you the exact layout of what happened. So I transferred money from my checkings to my savings, and it took out $100. Okay. So again, that's it for this section right here. Okay. Next section I want to talk about is going to be what happens when you have to deal with bounced checks. Okay, whether you collected a customer payment and that check has bounced, or whether you've written a bounced check. Okay, how do you deal with it? Okay. So this case, handling bounced checks. So let's go ahead and take a look at our example here in our book. We received a payment from Mr. Bob Mason. Okay. His check number is 2526. So in any ways that you want to look up where that is, you can either figure that out either through your receive payments, right? If they say you click receive payments and click the previous one, but for any reason, if it isn't that previous one, then you want to go ahead and actually locate the check in the customer's center. Okay, so in this case, there it is. It is the previous one. We just received a check from Mr. Bob Mason, check number 2526. Okay, and now we need to record that Mr. Bob Mason actually sent us a faulty check. He didn't have enough money in his bank account. So how do we adjust or fix this error in our books? Now, oftentimes when you deposit a check, okay, whether it's you depositing or you sending out a faulty check, your bank is going to charge you service charges. Okay, especially if you have a bounce check, because they're trying to process the money, and because you sent in a faulty check, it's going to bounce back saying you had non-sufficient funds, or you tried to deposit money that isn't there. So in this case, you get faulted, and the individual who wrote the check also gets faulted. So in this case, That's a fee that you are not going to be willing to accept. Now, how are you going to um, be able to charge your customers? Well, of course you can, right? We could charge our customers anything for any reason. And in this case, if someone sent me a faulty check, I can also charge them money for, reason being, right? If it's a late fee, you can still charge your customer for that. Okay? So, once again, when I find my payment I go to my receive payments window to go to the customer payment, and here it is. I located Mr. Bob Mason's check. And how do I record the bounce check? Only one way. So you must locate it first, and at the very, very top, you have record bounced check. Okay? You don't necessarily have this in your customers, okay? But it is there when you actually open up the payment detail information. You have the record bounce check right here. So in this case, what I'm going to do is I'm going to select this, and it's going to give you this window here. Okay? And this window is going to basically say, well, you're going to be, you're acknowledging that Mr. Bob Mason wrote a faulty check. So how does this work? In this case, well, first off, how much did the bank charge you? They said they only charged me $10. Okay? And when did they charge you? They charged you on, let's see. They charged you on, yes.
Ma'am, if you don't mind, would you please go back where you had this to pop up, this small window?
Record bounce checks at the top of my
Okay.
window.
Yeah, because I was trying to do that earlier on my own. Okay.
It's at the top of this window. Okay, but you have to be in the correct check information. So in this case, Bob Mason wrote me a faulty check, and that was check number 2526. So you need to ensure this first before this button can actually be visible.
Oh, I see. That's what I was trying to do. So
Yeah.
this should be checked. All of this line item should be checked.
Yes.
Okay.
Okay, because in this case, we received a check from Bob Mason, right? But in this case, this specific check, 2526, he paid for two services. He paid for two
Okay.
bills. You have to make sure that this is the correct one, because if this doesn't right here, if you don't have anything here, that button will be grayed out.
I see. I
Mm-hmm.
understand now.
Mm-hmm. So in this case, they told me to just go to the previous button, and it should be it. But if you do click that previous button and that's not it, you would have to actually go into the customer center to locate that exact check for it to pop up. Okay, so once you get there, we're going to click record bounced check. So again, in this case, right? Okay, hold on. All right, so in this case, $10. And when did the bank charge me? Okay, so in this case, the bank charged you on the 8th of February. Okay. Okay, the 8th of February 2021. Okay. And once again, we have an expense account for when the bank charges us money, and we also have a separate account that doesn't affect Walnut Creek or San Jose. It's called overhead. Okay. So then now, how much would you like to charge the customer? Because in this case, because of their mistake, you got faulted for $10 from the bank. Is that fair to say that you're going to pay for their mistake? In this case, you say no. But what you're going to do is, I'm going to go ahead and charge my customer because in this case, right, I got charged for their mistake, for them writing me a faulty check. How is that my fault? Okay? So in this case, I'm going to say, I'm going to have him pay me $20, right? $10 to cover the service charge and $10 as a profit or convenience charge. Okay? Whatever you want to, however you want to justify it. Now, obviously, you don't want to be going overboard and saying, I want $100. Because then your customer is going to definitely, they're definitely going to disagree on that number. Okay? But usually it could be anywhere from $25 to $50. You have a choice too. If for any reason that, they do end up not paying or any reasons like that, you can increase their interest, or you can increase their minimum payment. And usually that's what happens with a lot of businesses, that if you either are late on a payment, or if you just didn't pay at all, or if you do end up writing a faulty check, your minimum payment goes up and so does your interest. Okay? So again, this is another means of charging your customer for that penalty, whether it's a late fee or whether you submitted in a faulty check. Okay, so in this case, I'm going to click OK. Or click next, excuse me. And then now it's going to say, is this what you're for sure you want to do? You're going to charge him $20 on top of what he owes. And I say, finish. So now that has happened, right? What you're going to notice is now Bob Mason owes me, okay, for all his services, including, and he gets charged that $20. Okay? So again, if I go to that payments, right? So if I'm going to go to here to my customer center, and I'm going to locate Mr. Bob Mason. Okay. All transactions, so I can see every single one. So in this case, I have a customer payment right here, right? The 25.26. What you're going to notice is that right here says it's recorded as bounced. Okay, so right here is a huge indicator. Well, the check has bounced, so therefore they still owe you this money. And of course, it's tallied up right here. You got the 401, the 776, and then the $20 that you charge them for the inconvenience of the bank charging you that money. Okay? And then, of course, if you take a look here, they even recorded a general journal to fix this mistake right here, right? They transferred the money, right, from checking, right, and they put it back to accounts receivable. See, because they owe me the money now. The check never went through, so now you're recording the transference back from the checking account to the accounts receivable account, because now they still owe you the money that they were. See, as you can see here, he owes me $11.97 and 86 cents. Okay, so for any reason that you need to record, let's say he sends you another check back, you just gotta record it just as standard, right? Receive your payments, right? Bob Mason. And once you've done this, all his information is going to pop up. Okay, so again, he used to owe me $11.77. Now, because we charged him an extra $20, he owes me $11.97. Okay, and again, when you do enter in this this customer payment, again, you're going to do it for the $11.97.86. Okay. He's going to probably make a payment the next day. Okay, so in this case, 1197.86. Okay. He's probably going to make a payment since he wrote the check on February 8th. So maybe he did it on February 10. Check number 2560. Doesn't matter what it is. And he wrote you another check. Okay, for the $11.97, including the $20 fee that you had. Okay. Once that looks good, I can go ahead and have the choice whether I press enter or I can press save and close. Okay, so in this case, there you go. So now I saved and I closed it. So that means the next time I go to my customer again, it's going to show that we have another payment, $25.60 for that $11.97. So again, it took it out of your checking account. Now it replaced it with this new check here. All right. So again, that is why it is very crucial you do not delete any transactions. Because if I delete this transaction, right, it affects my checking account. It affects my accounts receivable. It affects this payment right here. Okay. All right. Any questions in regards to recording a bounced check?
No. No.
Okay. All right. So now the next section is, well, what happens if you wrote the check? Well, if you wrote the check, they give you a couple steps of what you can do to fix that. So if you wrote the check, right, you have a few things that you could do, right? Very similar. You could either do what Mr. Bob did, where you can reissue a new check. Okay. Other things that you could do is you could definitely call up the vendor, ask them what's going on. Second thing too is you can go to the bank, deposit the money, and then tell them to deposit that check in again. But the best rule of thumb here is that you should figure out why you don't have enough money in your bank account in the first place. But second thing too is they're gonna probably charge you one way or another, whether they increase your minimum payment, charge you extra more interest, or they charge you a flat fee. Okay, so whatever it is, you're going to have to discuss it with your vendor. Okay, not all companies are forgiving. Okay, you can plead your case saying, I'm so sorry, this won't ever happen again. They can revoke their decision on that. But other than that, here are a few steps that you could do to take if you wrote the faulty check. Okay. Right. So next section here is going to be talking about bank feeds. Now in this case, right, what are bank feeds? Bank feeds is when you decide to link your checking account from whatever bank institute that you'd like, and you make a connection to QuickBooks. Okay, so that means Intuit will be logged into your actual banking account at all times whenever you need it, and it will have what's called a bank feeds. Okay, this is new to QuickBooks 2020. Okay, so it does explain here that they're still working out on figuring out how to make it better. Okay, but bank feeds is definitely new to QuickBooks. So what bank feeds does is when you click on bank feeds, it pops up a banking center. That's the part that I'm saying that is new to QuickBooks. Okay, bank feeds have been around. All right, it's a great way to connect to your actual banking account and be able to do online banking that way. Yes, make it 10 times more easier instead of having to do on a separate website. Actually link it to your QuickBooks so you're able to do online transactions anywhere and for any reason that your bank account gets notified. So for example, if it gets flagged down for either writing a NSF check or you depositing an NSF check, it should report it to the online banking, and you can set up notifications to flag you and tell you every time you log into QuickBooks. Now, of course, the dangers of that is you're giving QuickBooks access to your actual bank account. So you definitely want to be very extremely careful in regards to having anybody have access to your computer. Okay, because again, the more sensible data that you put into QuickBooks, again, they claim to have a really high security type of uh, you know, network that, that doesn't allow people to try to go into your account. But of course, every program will have its flaws, okay? But if you think this is the best way for you to go around so that you're able to access your bank account at all times by using Intuit, that way you don't have to physically log into the account yourself, then Bank Feeds is for you, okay? Now, of course, in this example, I can't show you how to access this because Bank Feeds, quote unquote, is going to be, well, you need a real bank account. So it tells you do not perform these tasks is because in this case, Bank Feeds, right? The checking account that we're using is a non-existing checking account. National Bank does not exist, or in this case, I think that's what it's National Bank does not exist. Okay, so we are kind of in an error there because we don't have a real bank account to take a look at, especially if this company, right, Questiva, they're not going to give us access to their real bank account. You're like, that's, you know, a big, huge, you know, red flag right there. If they gave us access to their actual real bank account, what troubles can they happen there? So in this case, you do have to do your reading for this section for it to make sense. But as you access this, right, you can have access to as many accounts that you want to put on here. So that's the great thing too, is it helps you save some time instead of opening 5 different tabs to go into 5 different bank accounts, right? You can have them all open in one. All right? So it's going to list out your checking account, your savings account, your credit card if you want to put it on there. Any account that you want to do, but you have to set it up using the Bank Feeds and so on and so forth. So again, it has to be a legitimate bank account with a legitimate routing number and so on and so forth. So you do need to put in real data for this to actually work. So again, a lot of this is theoretical just because, again, we don't have access to a real bank account. So I cannot show you how to do it. But once you have access to it, again, you'll have an overview of all your credit cards. Okay. And again, you can, when you log into the banking center, you can select the credit card or bank account, checking account, whatever it is. And on that page, you'll have options on what you want to do, whether you want to make a payment, whether you want to transfer from an account to another account, doing electronics funds transfers, whatever reason that you want to use your online banking for, you're able to do so. Okay, so that's that section there. Okay. Now, any questions there?
No.
No.
Okay, so I'm going to go ahead and skip forward because, again, it's all just talking about what you can do in the banking center. Okay. So, the big portion of this entire chapter is going to be dealing with bank reconciliations. Okay? First off, what is a bank reconciliation? Well, a bank reconciliation is a means of way to ensure that whatever information that you put into QuickBooks is going to match the information that you receive from your actual bank itself. Okay? So, a great example is every single month you'll have a bank statement, and what you're going to do is you're going to take that and you're going to go over your own checking account in QuickBooks to ensure that the money actually went through. Okay? So just because we wrote a check, that doesn't necessarily mean it's going to be taken out from our checking account right away. All right? The thing that we have to understand is if you're the one that's writing the check, whoever is receiving it is going to be responsible for whether the money gets taken out of your bank account or not. Okay? So again, if you guys know this information, a check has a holding value up to 6 months. Okay? So once the check has been cut, the recipient of that check has up to 6 months to deposit that check into their checking account. Okay, so that means we could be doing a bank reconciliation and we could notice that a check has never been deposited or never been taken out of our checking account because of the bank statement. Okay? And how we figure this out, right? If for any reason that we notice that this check has never been cleared, then your obligation is to call up that individual that you wrote a check out to and ask them where they did the check. If they say they claim they lost it, then you know the procedure, right? Void and issue a new one. Okay? All right. So in this case, yeah, you have a question?
Yeah. So, like, we wait 6 months until we call them, or like during this time, we need, like, before 6 months, we need to talk to them and ask them if they lost it or not.
Oh, usually the 6 months is the holding period on the check. You should definitely call them if it's after been a month or so.
Okay.
Yeah, because you definitely want to make sure you clear out whatever checks that you have in your checking account as soon as possible. You never want to wait till the end of 6 months because that's again any transaction can happen in between, and that can also be one of those things that you could forget. Okay, but definitely, you definitely want to ensure that your recipients of those checks do clear. Okay. Other things too is if you made deposits, if you did some EFTs, right, or if you um, withdrew some money from your checking account. You always want to make sure that you make sure that that transaction actually went through in your checking account, right? And the best way to do that is through a bank statement. Now, as far as this, right, is your bank account going to be the only account that you can reconcile? No, you can reconcile any current asset, other asset, any liability, and any equity account. So any account that has a register, you are able to reconcile. Now, does it serve a purpose for you to reconcile those accounts? Not necessarily, but it doesn't mean that you can't. All right, especially if you're running a report, right? And let's say you actually miss transfer information over, right? Yes, you can definitely use the reconciliation to figure that out. Now, the more common ones that you would definitely see is going to be a bank account or a credit card. All right, because that one, the great thing about being able to reconcile those typical types of accounts is because you usually would get a monthly statement at the end of the month, whether it's a credit card or whether it is from the bank. Okay, and usually you can request a monthly statement at the end of the month anyways. So that's the best way to be able to tidy up your transactions and get ready for the next month or the next accounting period, depending on what it is, right? If it's every 3 months, then reconcile your bank every 3 months, okay? But this is going to be a standard thing that you could do every single month. There's no there's no regards into it, or there's no you don't necessarily have to do it, but it's definitely important that you do see whether your money is going somewhere or not, okay? Especially if you're constantly writing out checks. You want to ensure that the person who's receiving the check received their check, all right? So they don't purposely say, I didn't receive the check, I'm charging you a financial charge for that. No, right? You want to make sure that the money that you write a check out for goes through, and also the money that you deposited has also gone through, okay? So again, the more common ones are going to be a bank statement or a bank reconciliation, or you can also do a credit card reconciliation. So first rule of thumb is you need to have a bank statement. Okay, so in this case, here's my bank statement for my checking account. Okay, it gives me a summary of what I began the month with and what I ended the month with, and it gave me a few things that I need to look here. So again, I got charged interest. Okay, I got my list of deposits I've made, list of checks I've written out, and other transactions that, occurred between the month, okay? So that's the most important thing, is to ensure that you have the bank statement so then you can adjust your account accordingly. So, yes.
So if we give the check and like they just come to us and they said, oh, I didn't receive it, or I didn't do it, or I didn't, check it. How do we make sure like they did it? Is it like when they somebody like check it, it show us where and when?
In this case, if it's the customer, or I'm sorry, it's the vendor that hasn't deposited, on our end, yes, right? When you write a check, right? How do you know it came through? Or how do you know it's been taken out of your bank account? It gives you the exact date of when it cleared on your bank statement. Now, is it your responsibility to call your vendors and say, did you receive my check? No. It is not your responsibility, because your responsibility is to take care of your own business. If they don't want the money, or if they don't want to put it in their bank account, that's their problem. It's not your responsibility. But if you notice that it hasn't cleared, and this vendor is your supplier, you definitely want to make sure you contact them and say, hey, did you receive my check? Because I sent it to you a month ago. You want to ensure that they receive the check, because they can claim, oh, I never received it, oh, I lost it, etc., right? So your responsibility is, well, I owe them money. I need to make sure that that money clears. And that's the purpose of doing a bank reconciliation.
So my question is, like, we could see, like we could track it and we could see when they did it and where.
Yes.
Okay.
Have you never checked out your bank account before?
The check account, like the online.
Have you, like, your own check account, your own checking account? It tells you when something has happened.
Yeah, my husband he doing this. Okay.
Okay, I'm just letting you know. If you do online banking or anything like that, if you write your check out, it should appear on your bank account, and then that will tell you and determine that the other person received the check and they took it out of your checking account.
Thank you.
So once we have this section right here, right, now we can go ahead and reconcile our bank account. Okay, so there are only two ways for you to reconcile your bank account. Okay, on your home page, right here under banking, you have reconcile. Now, if you choose this option, you only have the banking option. Now, if you want to reconcile another account, I would recommend you go to your banking menu. Okay? Your banking menu, and I want you to reconcile that way. So I'm already there, so I clicked it on my banking menu. Again, there's only two ways for you to do this, and that is the home page and the menu bar. Now, let's take a look here. Now it's asking me, I need to fill in my information because I'm going to be completing a reconciliation. So what we got to do first is, what account am I actually reconciling? So in this case, because I use that window, I have the options to choose any account that has a register, like I mentioned before, okay? So again, you're limited to your assets, other current assets, liabilities, and your equity accounts, okay? But in this case, our main focus is the checking account. So you want to ensure that right there. Now, what is the date that you are going to be completing this reconciliation? Well, let's take a look. What is your reconciliation date on your, or what's the bank statement date on your statement? It says here that this is as of January 31st, 2021. So in this case, that's exactly what I'm going to do here. It's going to be January 31st of 2021. Okay? So I go ahead and just click to confirm that this is the correct date. Okay? Now it tells me that my beginning balance on hand was $14,384.50. This number is extremely important before beginning your reconciliation. If for any reason this does not match your actual account number in your bank statement, you already have your first discrepancy. So we need to make sure that that matches. So what you began with on December 31st, right, you should have $14,384.50. So in this case, our numbers match, okay? Now, where does this number come from? Every time you do a reconciliation, right, this number is taken from your previous reconciliation. You cannot type in, as you can see, you cannot type in this number. So it's very, very important that when you're looking at this number, it matches 100%. Now, once again, if it does not match, what do you do there? You would actually have to go into your reconciliation window, and then you would have to go locate that discrepancy. And I'll talk about that in a few minutes, okay? So now that we ensure that our beginning balance matches on my end and the bank statements, now in this case, what should be my ending balance? This is where you have to type it in, because your ending balance in your check register from Intuit is going to be 100% different than the one that you have on your bank statement. Why? Things don't clear on time, right? We talked about, if you wrote a check out, that doesn't mean it's taking it away from your your register, your checking account immediately, right? It takes time. It takes 2 to 3 days, right? Or it could take, depending on whoever the recipient is, it's going to take them time, because if they decided to wait until the very end of the month, or they decided to hold on to that check for later on until they decide to deposit it, it depends on that person. So that's why those checks will never clear at a specific time, especially if they decided to do it Friday at 6 p.m. The bank doesn't work over the weekend, so it won't clear until Monday or Tuesday or the following Tuesday. Okay, if Monday's a holiday, right? It won't clear until Tuesday. So again, it takes about 2 to 5 business days for a check to clear, depending on whether that individual who received the check deposited or not. Same thing goes with putting your own deposits in there. If you decide to do it at the end of the month or on a Friday, it won't clear until Monday or Tuesday. Okay? Some places claim that it will clear right away. Sometimes they don't because, again, bank, depending on what bank account that your bank institution that you're working with, they might have policies saying, well, if you deposit between Monday to Friday from 8 a.m. to 6 p.m., then it will clear the next day. If not, you have to wait till the next working business day. Okay? So again, there's a lot of key factors when it comes to that. So in this case, it's telling me that on my bank statement, it should be $5,424.92. So 5424.92. And that's what I'm going to type here. 5424.92. So you need to put this in from your bank statement into this right here, your window here, because that's your point of reference. This is how much you should be matching at the end of the bank reconciliation. Okay? And of course, now we're going to fill in all our extra information. So again, what about service charges? Well, let's take a look. Did my bank account get charged for services? Well, let's take a look. Okay? Service charges. Yes, we got one on January 31st. Service charge for $10. Okay? So in this case, that's what I got to plug in. I got charged $10 on the 31st. 21. Okay? And what bank account am I going to be putting this in? In this case, right, we know what it's called, right? It's called bank service charges. Bank or bank service fees. Okay? Let's see. Bank service charges right here. And once again, your bank account affects both San Jose and Walnut Creek. So we have the overhead account, or overhead class. Okay. Now let's see. Did we earn any interest? So again, for any reason that you have either two things, right? If you allow online payments, you can charge a convenience charge, right? Sometimes they charge $2.75 if you decide to use a credit card. Or if for any reason, like if you are financing your payment plans, right? Your interest that you're collecting is going to be whatever agreement terms that you discuss with your customers. So whether it's 17% or 24%, that's going to be extra money that goes into your bank account, not towards the actual principal. Okay? So for any reason that you do have that, you can collect interest. So in this case, interest, right, was done on the 31st, and I collected $8.62. So that's what I got to put in here. $8.62. Okay. Charged on the January 31st, 21. Okay. And what account is this? This is going to be interest income, right? It goes towards your income because it's extra money that you charge your customers for the convenience of using or putting on an account. Okay? And once again, it affects both companies, so you want to go ahead and put overhead. Okay? So I'm going to go ahead and click continue. Now, once you've done this, this is where you're going to be check marking off whatever you see on your bank statement is where you're going to check off. Now, what I want you to notice is down here, down below, right? You got your service charge, which took out $10. You got your interest, which added $8.62. And your ending balance is, this is your goal, right? So it's telling you what you need to clear. You need to clear $8,000 and $958.20. That's how much difference there is from your beginning to your ending. So in this case, we need to see what actually cleared. So that's where your bank statement's going to come into play. In this case, right, how many deposits cleared? So again, when you're doing your business, right, you always are going to be constantly depositing money. So in this case, let's take a look here. Deposits. you have a total of 3 deposits, one on January 30th, second on January 30th, and the last one on January 31st. Now again, all three, you deposited $249. You deposited $19.50 and you deposited $11.77. So in this case, that's exactly what I'm gonna do. I'm gonna go onto my reconciliation window and I'm gonna go into my deposit section and I'm going to select those deposits that have cleared. Now, in this case, right, what you're going to notice is that there's a lot of other things that happen within the month of January, right? For any reason that you want to hide any transactions that happen after, you can do that by filtering it up here. So up here, it says right here, hide transactions that are after the statement date. So in this case, right, I have a few transactions that happened in February. By selecting this, it makes it that much more easier and clears up all the data because in this case, I'm only looking at things that cleared between the month of January. Okay? So then now let's go ahead and continue. So here you go on my deposits. I have a total of 3 deposits, okay? One for $249, one for $19.50, and then I have one for $11.77. So you need to manually check mark what has cleared. So in this case, the bank has recognized that all these monies is cleared into my checking account. It made it through. It processed and now it showed up on my check on my bank statement. So that means this is money that has cleared. Yes.
So if we hide it, it's never delete. It's gonna be like when we need it. Like how long is gonna be stay over there?
What you're doing when you say you hide the information, you're just clearing it up. So then it's filtering your data so it only shows what you need to see. Do I need to see my February transactions?
If for some reason like we have something or like we didn't pay or the customer or the vendor coming to us, we need just to go back. Like for how long is gonna be like hide it?
It's only temporary.
Oh.
If you want to unhide it and you want to see everything, you just unclick it. What that does is just filtering your information so you don't see it. That's it.
I mean, like, for how long is gonna be like all this? Is it like we could like customize it? Like we could like do it for 1 year, we could keep it, or like it just disappear after like months or 6 months?
It doesn't do anything to it. It doesn't disappear. It doesn't do anything. It's just not. It doesn't show it. That's it. That's all you're doing. It's like you're just not displaying it. That's all that this is. You're not hiding it. You're not deleting it. You're not putting it away or anything like that. You just don't want to clutter up your space because again, if you're a typical business, your transaction list can go beyond this. You can have hundreds of checks that you deposited. You could have 100 checks that you've written out. Now, in this case, this helps out a lot if you don't want to have to scroll all the way down to go through all your transactions, right? You can eliminate that, especially because right now I'm only focusing on my bank reconciliation that is only for January 31st. So in this case, does February affect anything that has to do with January 31st? No. So in this case, right, when I'm hiding my information, I'm just filtering it so I don't see it.
So my question is like this list or the Excel like sheet, it does have like a period time and they will be delete everything, or like whenever we have it, we could hide it, but it's never delete. It's never like gone.
It never deletes. It doesn't do anything. It just filters your information. That's it.
Even we keep like add new people and new transaction, correct?
Every time you do a bank reconciliation, you're setting a date on there. So it doesn't matter what you do. This, again, hiding this information does nothing to your bank account, does nothing to the customers, does nothing to your vendors. It's just a way for you to sort your information so you could see it without cluttering, without confusing you. That's it.
Okay, thank you.
That's
Thank
all
you.
I'm doing. Okay. All right. So there you go. So now when I click on that, I only see up to January 31st. I don't see anything else except for this one, obviously. Wait, that's because I undid it. So if I clear up all this, it only shows me what happens from January all the way to, or all the way up to January 31st. So as you notice here, I have a transaction that happened in December. That's fine because my statement is going to only reflect things up to the bank statement. So then only things that cleared between all the way to January 31st. Okay, I don't need to see February transaction because that has nothing to do with my bank statement. Okay, so in this case, there you go. I cleared up my information. And now that I clicked all my deposits, notice this. Now I have a difference of negative $12,335. So therefore, I need to do a lot of clicking around because in this case, my deposits have cleared, but I have a huge difference now. Okay. So the next one is going to be looking at how many checks have cleared. Now I'm under my checks, outstanding checks list right here. Okay. So let's see how many checks cleared and how many have I paid. So in this case, best reference number is using your actual check number. So in this case, I got check number 325, 326, 327, 6001, 6003, and 6004. Those are the ones that actually cleared. 6 checks. All right. So again, 325, all the 327. 6001, 6003, and 6004. Okay. So that's what I'm going to do here. I'm going to go to my list for my checks and I'm going to check them off one at a time. Okay. So starting with our very first one, we have here is check number 325. Okay. Yes, we had that. Check number 326, that cleared. Check number 327 has cleared. Check number 6001, 6003, and last but not least, 6004. So that means I have a couple of checks that have not cleared yet. That means whoever I wrote that check out to has not deposited that money or vice versa, right? They haven't received it yet or they just received it. Usually when you write checks at the end of the month, it won't clear until February, okay? Right? Because of that whole 2 to 3 days standard period of like waiting, right? So in this case, I have an outstanding check for 6,006 and I have one for 328, okay? So again, these are checks that have not cleared yet, right? Because your bank statement has not recognized it or hasn't taken out of your bank account. Okay, so then now let's take a look. I am still outstanding for $8,000. So let's go ahead and take a look on my bank statement. Now, what other piece of information have I not cleared yet?
Your $8,000?
My $8,000 what? What did I do?
Is your $8,000 still outstanding?
Yes.
So you said what's still outstanding, right? It's the 8,000. I have. Can you go back? I'm sorry. Just step back in here.
So right now I am missing $8,000.
Okay, so it's on your statement.
What is it under? Is what I'm trying to say.
Oh, under the withdrawals and payments.
Withdrawals and payments. So in this case, I withdrew, or the bank or the company withdrew $8,000. So let's go ahead and take a look at my reconciliation window. Where is my $8,000? It is right here. we withdrew $8,000. Okay? And now that I selected that $8,000, now this is what you want. You want your difference balance to equal to 0. So that means the next time I do a bank reconciliation, I'm going to be having check number 6006, check number 325 or 328, and this $100 transfers from my checking account to my savings account. So in this case, that's the next couple transactions that's going to be holding through for the next reconciliation window. Okay? Now, let's say nowhere on my bank statement I had this $8,000, right? Nowhere on my statement. And I can't find this at all anywhere. So what I need to do here is I need to click on modify. Okay? What I'm going to modify here is, well, was it because my beginning balance was different? And like I mentioned this, right? If this was different, you need to run what's called a reconciliation or locate discrepancy reports. Now, how do I do that? Well, if you go down below here, you have locate discrepancies. When you get to here, you have two options that you can run. You can either run the locate discrepancy report, or you could do the previous report for your bank reconciliation to figure out why you have this outstanding information. Okay, so again, I'm not going to do it just because the books tells you not to do it, because in this case, we do have a perfect reconciliation. All right, we have located that $8,000. It was because I withdrew money. Okay, but for any reason that you have discrepancies, and like I mentioned, right, once you save this, the next reconciliation that you do, it's going to start with $5,424.92. Okay, and that means your bank statement should also say the same thing. Okay, but once you've done that and everything looks good and you're at 0, you can go ahead and record this reconciliation. Okay, so once you record this reconciliation, here you go. It's going to ask you what do you want to do now that you complete the reconciliation. So as you can see, right, it has cleared up. Now I have 3 outstanding checks and withdrawals, and my deposits, there's none. All right, in this case, I'm going to do both, and I'm going to display them. Okay. Now, once I did that, I click OK. So here's your report here on your bank reconciliation and so on and so forth. And this is what happened, right? How did I get the money to equal 0? Well, I wrote all these checks, I deposited all this money, and so on and so forth. Okay. Now, for any reason you have to feel necessary to do this, you can always undo your last reconciliation. This is highly not recommended. But as you can see here, right, like I mentioned, right, it carried that number from my previous reconciliation. Now it's going to begin with the $5,424.92, like we mentioned, right? But for any reason you need to undo that reconciliation, you may do so. However, you definitely want to be very careful, because by undoing the reconciliation, you can mess up your bank account if you do not know what you're doing. Okay? All right. So again, your book tells you what happens when you do undo a reconciliation. Okay? Any questions?
No.
Okay. So again, your book is going to give you a list of what you can do to do your reconciliation discrepancy report to locate your discrepancies. But again, a lot of it does tell you do not do it, just because, again, it's theoreticals. Okay. All right, and there it gives you your bank reconciliation reports. So the next section I want to talk about is going to show you how to also do a different type of reconciliation, because again, if bank is the most common one, well, credit card is going to be the second common one. Okay? Just let me find the page real quick. Okay, here. So, as we mentioned before, right, you can reconcile anything and anything that is an asset, liability, and equity. Now, if a bank statement is going to be a means for you to compare your transactions, right, a credit card reconciliation is going to come in second place. Okay, and on top of that, when you do your reconciliation, you also get the option to either make a payment to your credit card or not. Now let's go ahead and take a look here on page 201. Here you have a picture of your credit card statement, and this is what we're going to do. Okay, we're going to reconcile our credit card. Okay, now how do I reconcile my credit card? Well, it's the same way that you reconcile any bank account or any account, right? Whether it's a bank account, a credit card, whatever, right? It's the same exact way, right? You can either choose to reconcile here, and the only difference here is you just have to change what account you are reconciling. So in this case, I want to do my National Bank Visa credit card, okay? And I want to do it for the February 28th for 28/21, okay? Because that's my statement date. Okay, so 28 for 21, that's my statement date. It says that this statement is for February 28, 21. Okay, so again, what information do I need to know here? Well, you have a new balance of $184.81. So that is very important that you need to know. $181.84.81 is what I want, what my bank account is ending. And in this case, right, I also need to make sure that my beginning balance was $2,152. And is that true? Well, let's take a look. My beginning balance, right? If you look at your statement down below, my beginning balance was in fact $2,152, right? It says right here, your beginning balance. So in this case, that is correct. And what my end goal is, I'm at $184.81. Okay. Now, same thing here, because when you have a credit card, right, you're going to be receiving interest charges. So in this case, how much was my interest for this credit card? In this case, interest will tell you in one of these boxes. So let me locate it. Interest. Okay, it tells you your minimum payment is this. Interest. If I actually read my box down here, right, I was outstanding for $21.52. Okay, the interest that was collected was $16.11. So that's why you are down to now $184.81. So in this case, right, it says right here, this is what you began with, this is what you paid, this is what you charged, this is your interest, and this is your new balance. Okay, so in this case, $16.11 is what I was charged, okay, for interest. So $16.11. And of course, that was charged at the end of the month. Okay. So then now what account is it going to be? This is going to be interest expense, because you had to pay your responsibility for borrowing money from a credit card lender, right? So that means that is interest expense that you are paying. Right? And again, it takes it immediately away into your credit card. It charges you automatically for the interest, so you don't necessarily get billed for it, right? It gets charged and added to your current balance. So again, interest expense. And what is this for? Well, my credit card is used for both locations. So again, similar to the bank reconciliation, except this time I don't have bank fees or interest collected. I only have interest that's being charged because it's a credit card. So once everything looks good, I'm going to go ahead and click continue. Now notice this, I didn't have many transactions that occurred between February. Again, you can hide if you'd like, but in this case, there's only so much that transactions that we use the business credit card for. So let's take a look at my list here. So in this case, it's coded that I made a credit card payment, and then I charged my card for 133, and then I charged my card one more time for $35.40. So let's take a look at my reconciliation. So in this case, I made a payment for the 2152. Okay, so there it is. And I charged my card for 133, okay, and the $35.40. So here my discrepancy or my reconciliation became 0, and that's exactly what I want to look for. Therefore, these are things that cleared on my actual credit card statement. Okay? And I go ahead and click save and close. So once you've done that, here is what's different from the bank reconciliation window to your credit card, okay? In this case, your credit card gives you the option to either pay that credit card right away, or you could choose to enter in the bill, okay? And I'm going to go ahead and click OK. I'm going to choose enter in a bill. Now, here's the rule of thumb. When you're looking at a credit card statement, right? You also got the window here. I'm going to go ahead and click close. When you're entering a credit card bill, okay? Notice this, right? It tells me that my minimum payment is $12, okay? Yeah, it's a really good credit card. If it's the minimum payment, it's only $12, okay? So in this case, right, I'm already told exactly how much I owe, and I'm told exactly how much I need to pay. Now, in this case, that's where you have to make this executive decision, because what are you going to choose to do? Are you going to choose to make a payment for the entire amount, or are you going to choose to pay the minimum payment of $12? Or are you going to choose to just pay right in between the middle, right? $50, okay? Whatever amount that you're going to be putting into your bill is going to be the amount that you agree to make a payment for. So you're not obligated to have to pay for the whole entire amount, okay? You receive the bill, you make the decision on how much you're going to pay, as long as you pay above the minimum. Of course, again, when we take a look at bills, right, you can always modify it whenever you'd like. But before you make a payment to a bill payment to this credit card company, make sure you adjust the bill accordingly. Because right now, if I decided to say I put in a bill for the whole entire amount of $184.81, and I decided to make a bill payment and only pay, $50, right? This bill will still be outstanding for the next time you are entering in a bill. And it's going to make no association, especially when you do and complete a new reconciliation for the following month. Okay, because again, that's the thing about credit cards, is that it's different every time you receive a bill, and then of course when you actually pay the bill. So the best rule of thumb here is, when you're entering in the bill, pay what you're gonna pay, right? Enter. But if you don't know right then and there, then save what you want to save and edit the bill later when you actually attempt to make a payment to it. Okay, so in this case, I'm just going to go ahead and accept this entire amount right here, and I'm going to go ahead and click save and close. Okay, there you go. All right, now how do I pay my credit card off? We did show you an example, right? If you entered in a bill, you must use bill payment, okay? But for any reason, let's say you're just feeling like you just want to go ahead and do an online transfer, you can also do that as well, okay, by going to write a checks. but that's if you do not enter in the bill. But since I've already entered in the bill, I must use bill payments. Okay, so remember those two choices that you had. You could choose to write a check right away without entering the bill, or you could choose to enter in the bill and pay later. Okay, so that's how you pay your credit card off. So if I were to go ahead and click bill payment, and I put in National Bank, so it's just right here. I go ahead and check this, right? And I'm going to pay for the whole entire amount. Okay, now you have a choice, right? You can either click to be printed. Okay, it's going to come out of your checking account, and it's going to be for, I'm going to say, for the next month. Maybe you made a payment on the 2nd of March. Okay, everything looks good. I'm going to go ahead and save and close. Okay, now this is where I can choose. Did I write a check out to them? Well, this is where you can choose here whether you use online banking or not. If you use online banking, right, and you just paid right out of your checking account, then that's what you can actually do. So in this case, I'm going to locate where my bill payment was. That's being pending to be paid here. So it was what, March? Here you go, March 2nd. Oh, I lost it. Let me see, March 2nd, where did it go? Okay, and if you, oh, here you go, March 2nd, right? And it says to be printed. You can go through this, okay? And let's say you used your online banking to do it, right? So then you can say, I'm not going to print out. There's no check necessary to be written out, right? Instead, I can say this was an online funds transfer. Or you could put online, or you can put your debit card if you'd like. Whichever means for it to record it in your book. So in this case, I did not use a check. I used my online banking to make a payment. So I use an EFT, and I can save and close. And it's going to say, do you make changes to this? You just say yes. And there you go. Now it appears up here that it's been an online payment, but it still was a bill payment. Okay. Any questions in regards to credit card payments and so on and so forth?
No.
Okay.
No.
All right. So again, that is it for chapter 5. Okay. So any other information on chapter 5, right? It's just going to talk about what reports you can do for bank reconciliations and so on and so forth. So if there's no questions in regards to that, let's go ahead and talk about, or actually go over the multiple choice questions here. Select the best answers for each of the following. Number 1, okay? When the beginning balance field on the begin reconciliation window does not match, okay, the beginning balance on your actual bank statement, you should do what? What should you do?
C.
C, right? You're going to click the locate discrepancy report in the beginning reconciliation window and so on and so forth, okay? And you're going to locate, you're going to find where your discrepancy is, okay? So, yes, letter C is correct. Okay. Number 2, okay, which statement is false?
A.
A, you can enter in bank service charges using the enter statements charges. Yes, that is false because again, what does statement charges do? Statement charges is when you want to charge your customers money. So that has nothing to do with your bank service charges. Okay? Now in your book it tells you that you can enter in your bank service charges manually through your register, your check register. Okay, but if you do that, that means when you're on your reconciliation window, you do not need to enter anything there. Now, what's the purpose of entering that information in your check register when you can just do it in your reconciliation window, right? You know, it's just much easier if you just do everything step by step through the reconciliation window. Not necessarily for you to have to enter those transactions prior before starting your bank reconciliation window. So that's what B says, that you're going to enter the charges into your register. You don't need to do that. Or that's the second one. Letter C. Letter B says to do it right in the beginning reconciliation window. Or you can use the write a checks option. Okay, but again, why have to double up the entries when you can just do it right in your begin reconciliation window? Okay. Number 3, okay, when you find an erroneous amount on your transactions while reconciling, correct the amount by
D.
D is correct. You can perform either B or C. So let's take a look what B says. You could double clicking on the entry and changing the amount on the transaction. Yes, right? We talked about editing transaction at any given time. Yes. If it's incorrectly marked wrong or it's a typo error, you flip the numbers around, you can go ahead and click on the transaction and fix it. Okay? And then letter C says selecting the entry in the reconcile window, then clicking on go to, and then change the amount in the transaction. Yes, you're able to do that too. Instead of having to exit the reconciliation window and manually doing it, you can just do it right into the reconciliation window. Okay. Number 4, okay, to properly record a voided check from a closed accounting period.
C.
Uh-huh. This one's straightforward, right? I taught you how to void a check. That's all you have to do, especially when you're in the if it is a closed accounting period, you just have to make the adjustment entry by either or, right? If you don't have access to it, ask your accountant to do it, but you do need to put in a general journal entry to adjust the accounts. Okay. Number 5, okay? Which of the following columns cannot be displayed in the check and payments section of the reconciliation window?
B.
Letter B is correct. You don't get the class. So if you this question is asking, so when you're in the reconciliation window, okay? Okay. Let's just make up another number. Okay. So again, on the reconciliation window, what column is not displayed? In this case, under the checks and payments, well, we have the date, we have the check number, we have who we wrote the check out to, and the amount. Okay, and let's take a look at the list here. So in this case, do we get to see the check number? Yes, we do. Do we get to see the date? Yes, we do. Do we get to see who we paid? Yes, we do. Did it show class? No, it did not. Okay. Number 6, okay, you have to reconcile your bank account, okay, correctly when how do you know you and Shirley did the bank reconciliation correctly?
B.
B, right? When the difference field shows 0. Correct. Okay. Number 7. The reconciliation summary report shows what?
D.
D, right? Both A and C. So A is the beginning balance shown on your bank statement, of course, right? And then letter C, which is the ending balance shown on the register in QuickBooks. Yes. So remember, that's the whole purpose of doing and creating a reconciliation is you're going to match your bank statement from your beginning and you're going to match it in your actual QuickBooks itself so then when you do proceed into the next accounting period or the next month, it will pull that information accordingly. Okay? Number 8, okay? What accounts should be reconciled?
A.
A, any account that receives regular statements. Yes. Okay, so that's the best way to do it. If you have a regular statement, then it's a great way to match from someone institute, right? If someone's doing a report to you, that would be the best way to match your information. You cannot write yourself a trial balance and be able to match it there between your own books because that's your books and your books only. We're looking at other organizations that send you statements so you can say, well, let's match them and compare my books to your books. Okay? So, yes, any account that has a regular statement. Okay? But let's go ahead and look at the other answers. B says any bank income or expense account. In this case, income expenses will never have registers, so they can never be reconciled. Okay. C says any bank account can be reconciled. So in this case, only bank accounts. No, in this case, no. It's any asset, liability, or equity, right? It goes beyond the bank accounts. And D says reconciling is optional for all account types. That's not true because only assets, liabilities, and equity can be reconciled. Okay. Number 9, okay? When you undo a bank reconciliation, which statement is true?
Is it D?
It is D, okay? When you undo the bank reconciliation, right? You do not have to delete this the bank service charges or the interest because it's actually going to remain in your actual bank account. So again, I didn't show you that example because it says do not do this example, but if you were to do it, right? And you decide to do redo your bank reconciliation, you do not need to include the bank service charges or the interest that you collected because it already placed it in there. So in this case, you're just going to be marking them off what has cleared. Okay, so D is correct. Number 10, okay? When a customer bounces a check, you should what?
D.
D is correct. Click the record bounce check button in the receive payments window. right? Only one way to do it, and that's it right there. Number 11, when you finish reconciling a credit card account, you
B.
That's correct, right? You have that extra window, right? That's the difference between doing a bank reconciliation and doing a credit card reconciliation, right? The difference is that you get an extra window that asks you to do an option. You can either write a check to pay the credit card right then and there, or you could choose to enter in the bill accordingly. Okay? All right, number 12. Okay, what is the accounting behind the scenes for a bill coded to be to a credit card liability account?
C.
C is correct, right? Because when you do a liability account, it will increase your accounts payable. So this is entering in the bill, right? We understand that a credit card is going to be similar to an accounts payable, but when we enter it in as a bill, it's going to increase your accounts payable and decrease your debit credit card because you're making, right, you're transferring from the credit card liability into an accounts payable by entering in the bill. Okay. Number 13, okay. In what account is a transaction created if you completed the reconciliation and your difference is not 0?
C.
For number 13,
Yeah, C. I go with C too.
yes, that is correct. C, right? You're going to be a reconciliation discrepancies, yes. So you would have to take and create an account for that. Okay. Number 14, okay, when you void a check written in a closed accounting period, okay, and QuickBooks gives you an option to create what?
Is it D?
Yes, D is correct, right? It's going to allow you to create a general journal entry in the closed accounting period, and you make the general entry accordingly, like whatever information. Now, again, we'll talk more about general journal entries in chapter 14 because usually general journal entries are meant for making those minor adjustments at the end of a given accounting period or even in a closed accounting period. Okay, so again, this was due to your reading, but this we will talk more in depth in chapter 14. Okay. Last question for this chapter is going to be you are notified that you have bounced a check. Okay, what should you do?
A.
Letter A is correct. Okay, you're either going to contact the vendor and discuss whatever discrepancy you have, or you whatever. If you wrote the bounce check, you have to talk to the vendor to kind of discuss what you can do with the payments and so on and so forth. All right. Good. Any questions in regards to chapter 5?
No.
Okay.